Starting event. Hello, everybody. This is Joe Lucey with this week's Market Huddle. So I've got some good news and some bad news. Here's the good news. I got my computer working, and we've got some things to talk about here today. Bad news is Tim Sargent from Sterling is not going to be able to join us. We just found that out literally in the last 10 minutes, a little IT issue on his end, and just not going to get it to happen. So we are going to hold off, get him to do his next week. And in the meantime, coming up with something to talk about, we'll probably take a few minutes here today just talking about Social Security. So keep in mind, Social Security is the absolute foundation of an income plan in retirement. 90% of us as Americans have access to Social Security in some form or fashion. And 2021, there's going to be some changes to our Social Security that I thought most everybody that's on the call could probably benefit from. So we're just going to kind of run through this a little bit. I don't have a PowerPoint. As I said, this all kind of came together here real quickly, but I did want to make sure that we spent a little bit of time and could go over some of these changes I think are pretty important for most of you. Keep in mind, at the end of today's discussion, if you would like to spend some time, whether it's with a phone call or we can do like a Zoom meeting, or we can, if you're just if you're not a client of ours and have some questions around your own Social Security, we can give you a second opinion around that. So I'm not going to focus so much on why we do some of the planning we do around Social Security today. These are going to be pretty academic things. What did the Social Security Administration change from last year to this year? What do you need to know about with your retirement? And well, with that said, we'll probably this week's visit might be a little shorter. I can do my best to answer questions, although keep in mind some of this information I'm going to be talking about here this morning, or I guess this afternoon, are really just kind of right off the press. So what are some of the things we need to know? Number one, cost of living adjustments. Again, I don't have a PowerPoint this week. I'm just going to talk about some of the changes to Social Security for 2021 that have changed from last year. And the first thing is that you are going to get more money with Social Security. Cost of living adjustment, 1.3%. That means everybody's going to get a pay raise. That's the good news. It comes out to an extra, an average $20 per month. And that's based on the average of $1,543 per month that the average recipient of Social Security is receiving. Here's the good news. You know, a lot of our clients are obviously getting more than that. We've spent some time optimizing Social Security. In fact, the average married couple we're working with should expect somewhere north of $40,000 up to about $75,000 a year in Social Security. We've even seen some cases in the 80,000s. But you know, so $1,500 a month. Somebody that's on average getting, they're going to get a 1.3% cost of living adjustment. This is good news. You know, a couple years ago, we didn't have any benefit cost of living adjustments. Social Security's own website says that the average that they expect is closer to about 2.3, 2.4%. We are certainly falling short of that since going back to probably 2008. We really haven't seen much for cost of living adjustments, but 2.3 is a little bit better than what we've seen historically or in the last 5 to 10 years. I think we had a 1.7 as well, but anyways, 1.3 is not a bad number there. So one thing new for 2021, you're going to get more money. Cost of living adjustment, 1.3%. Full retirement age. Full retirement age is moving yet one more year earlier. If you want to qualify for your full retirement age with Social Security, you'll have to be 66 and 10 months. That's because those of you that were born 1959 that'll be turning 62 here. That group there, that's how that works. So it goes up another 1 year, so it'll be 67 next year, and then it's going to plateau for a while. If you want to know what your full retirement age is, feel free to reach out to us. We can walk you through that. If you were born prior to 1955, it's 66. 56 to 59, it goes up 2 months for every year. And then by the time we get to families that are born in 1960 or later, full retirement age is going to be 67. Why is this important? So much around Social Security revolves around full retirement age. Once I reach full retirement age, for example, I can write a book. I can make millions of dollars in royalties, and the Social Security Administration will let me keep every penny of my Social Security income. If I were to take Social Security benefits any time before that, whether I'm single, married, widowed, prior to full retirement age, there may be an offset. You might run into some earnings limits. So that's all good stuff. And you want to know what the full retirement age is. Doesn't mean you need to wait for full retirement age. That's one of the biggest mistakes we oftentimes see. Somebody was told that they got to wait till 67 to take their Social Security benefits. If you're married, coordinating the benefits, or if there's a survivor's benefit, if your spouse passed on or something and you're eligible for that, there's a lot of different ways we want to look at it. That's why getting the personalized and custom Social Security report is so important, and why we want to make sure we personalize that for you. So if you want to take advantage of that, make sure that you let us know, and let's schedule some time, or maybe you just have another question or two about your benefits. We can show you how that all works. Higher earners are going to expect to pay more in taxes. The payroll tax around Social Security, that's the absolute workhorse for Social Security. In 2019, earnings, payroll taxes out of your Social Security benefits, those of you that are working, you get to pay FICA. Part of that, it goes to Social Security. It generated almost $1 trillion in collections just from payroll taxes. The revenue brought in revenue is brought in by applying 12.4% tax. That's both you and your employer, that comes out of your wages. And basically, it runs now up to $137,700. So if you have an income $200,000, you're only paying the payroll tax on your Social Security benefits up to that $137,700. That number is up slightly to $142,800 starting here in 2021. So anyways, this is where Social Security gets the majority of their taxes, or this is how the trust fund is funded. That number went up a little bit. The higher that number goes up, the little bit more that they can collect. I anticipate that outside of payroll, we're very likely going to see the tax rates around Social Security going up. I just don't see any way that they're going to keep only taxing up to 85% of Social Security benefits. My guess is that sometime in the next administration or two, next 4-year period of time, we're going to start seeing taxes up to 100% of our Social Security. That's why it's so important to look forward tax planning, see how your different sources of income hit your tax return. Let's start to project that out into retirement and through retirement, and see if there's some little things we can be doing proactively while taxes are on sale to reduce that. And if you're in a situation that we could help you drop the amount of tax you're paying on Social Security, it actually saves you twofer. It saves you money that you'd be paying on a taxable distribution. It also saves you some money on taxes on money that comes in tax-free. Love to show you how that works. We have members on our team that can walk you through that. I'm going to offer everybody here. Actually, let's just do it now. This is a offer that if you would like to, we're calling it the 2021 Planning Review. That's a great name for it. So go ahead and schedule your time if you would like to make sure that we talk about some of these things specifically to you. Right now, the amount of money that you can get from Social Security also went up slightly. Went up from $3,011 to $3,148 a month. That's the full amount that can come out at full retirement age. That's the max anybody can make at 66 and 10 months this year. Keep in mind that can grow another 30, well, not quite 32%. It's 8% a year times 3 years. So about 20, I can't do the math. About 25% higher is what you could get. So we've seen beneficiaries getting closer to $4,000. Disability incomes, the fifth, one of the other changes I want to talk about. The thresholds for disability income, how much you can make outside and still be able to keep all your money, those went up if you have a disabled spouse or beneficiary that's collecting Social Security benefits. I'd be happy to share that information onto you. Just click the offer there and let's schedule 15 minutes to talk about that. boy, what do we got here? I'm just going through some of these other ones. Getting the 40% credits, that really didn't change much, and such. You know, I think overall, because Social Security is such a big component for so many of you, it is the it has to be the foundation of what we call mailbox income. Mailbox income, just as a reminder, that money hits the checkbook each and every month, regardless of what's going on in Wall Street. I believe it's so important that we start to look at how to maximize, optimize Social Security. I use that term, optimize over maximize. A lot of times what I'll find is somebody will visit with somebody on the team here. I'll pop in there, I'll say hi. And what they'll tell me is they'll say, you know, we were always under the impression we should both wait till 70 to get the most out of Social Security. In fact, I've seen it where they've shown me these calculators that they use to come up with that number. And it's only once they go through our the secured retirement Social Security planning process, the analysis that we do they recognize that, you know, by taking Social Security oftentimes a little bit earlier for one of a married couple versus both waiting till 70, we can really get you very close to what you would have been had you waited till 70. But even more important, the break even gets pushed all the way out to 85, typically, if we both wait till 70 versus some of the other options. I'd love to show you how that works and such. So let's make sure you take advantage of that call there. Let's schedule some time, walk through your own personal situation, get you a report. You know, I also wrote the book on this. If you come in and you haven't had an opportunity to read my book, call in or you know, mark that there. Let's schedule some time, or even just call the office, 952-460-3260, 952-460-3260. I'll get you a copy of my book on Social Security. In fact, I'm going to type that in here to the text. Let's see, 952-3260. So here's a number for the office. Feel free to give us a call at that number, and we'll make sure you get a copy of my book. So Wendy does for calculating Medicare premiums include the 15% untaxed portion of the Social Security amount? No. The modified adjusted gross income, and what Wendy's talking about here is the extra premiums that we pay if we have too much income. I'm going to try to pull up something on that real quick, but I'm not sure I'm going to be able to do it during this call. But a lot of folks are unaware of this. You know, if you make a certain amount of income under a certain threshold, it's about $180,000 this year for a married couple. Means we're about $90,000 for a single person. Those families that are making more than that, counting their modified adjusted gross income, have to start paying extra premiums around Medicare. Now, the very first bracket, the threshold there, is that they start paying about $850 a year. Now, if you're married, that'd be times 2. So it's costing you $1,700 of kind of a hidden tax there that you may or may not be aware of. Now, it can actually get up to 3 times, almost 3.5 times the amount based on that. Here we go. I do have this. See if I can bring this in here. I'm not always the quickest with pulling this technology off. Those of you that have ever seen me fumble around would know that. I'm going to see if I can even bring this in. I may not be able to. Nope, that's going to be offered. Oh, folks, I'm sorry. You know what? I don't think I'm going to be able to share this. I can share it with you. If you text in there, you reach out to us and want to get a copy of this numbers, I can share this with you. But basically, if you make over $176,000, you pay an additional, or under 176, you're going to pay $148.50 as a brand new recipient of Medicare. Above 176, you're going to start paying an extra $50, almost $60 in Part B, an additional $12. So that comes into about $73 extra a month. We multiply that times 12, and that's where I come up with that $850 penalty. Now, that can be a penalty is up to $356 a month plus another $77. So the penalty can be a little bit north of $5,000 per taxpayer. So a married couple, $10,000. You got to be above an income of 500 or 750. We don't have a lot of clients hitting that, but it is something if you sell a farm or, an apartment building or something that you can hit that. So we want to know about that. If you're coming from a higher earning job and now you're going to be retiring, you also can file what's called an SSA 44 form. This are 8 light changing events that you can use. It can reduce your taxes. So the short answer to your question, Wendy, is no. Please send the numbers on Medicare premium. You got it, Kirby. We'll make sure we figure out a way to get that to you. If I don't have an email for you, well, we should be able to find an email for you here, Kirby. So we'll make sure you get that off the Medicare numbers. I'll get that out to you, and such. So you know what? Lots of big changes. Here's the big changes around Social Security for 2021. Number one, if you're still working and you are a higher earner, where you're going to pay more into the Social Security Trust Fund. That's the first takeaway. Number two, if you're collecting Social Security, they gave us a pay raise here, 1.3%. So everybody's going to get that. That's on Social Security. Unfortunately, some of that's going to be offset by the additional increase in Medicare. So you may not be able to keep the full amount. If you're collecting on disability, if you know somebody that's disabled and collecting Social Security disability, we can reach out and we can walk you through some of the changes there. But there are some nominal changes there that many of you are going to want to be aware of. And those are really the big changes. Again, I know it sounds like I'm rambling a little bit here today. Tim Sargent will be back on next week for the Market Huddle. I'm actually going to be out of the office, so I'm going to let the Dylan here in the office take the reins. He'll have Tim Sargent on. They'll review the Sterling results. They had a great year last year. They were up about 37%. That's followed by 44 the year before. If you run those numbers and you got the average returns, you'd have almost doubled your money. So in 2 years. So this year we kind of pivoted. We found out here 5-10 minutes before the call was scheduled that Tim was unable to get on. He was having some IT issues. And so therefore, I just kind of decided to talk a little about Social Security. Hopefully you find this of value. Hopefully you get some value out of it. Again, if you'd like to schedule a call, there's that you should be able to see an offer on how to do that. And let me go here. I'm not able to schedule an appointment. Get an error. All right. Anybody else that has an issue there, like Jim, we'll reach out to you and make sure we can schedule an appointment. I'm wondering right now if this issue might be with our, what we call this webinar jam. It's the system we use for this. And isn't Wendy asking if the government starts charging income tax? If the government starts, Jennifer, I think that if they start taxing 100% of our Social Security, they're kind of keeping the IRMA, the income related to Medicare adjustment amounts around Medicare separate. It's almost like this hidden tax. It's got to be in the know to know about it. So a lot of times families don't even find out about the tax until it's too late. That's why I think it's really important that we spend some time going through this. But the 15% tax-free you get from Social Security does not get included into modified adjustment amounts. However, things like municipal bond interest can. So we can walk through that. Some of these foreign tax credits, if you have some foreign investments, then can come into that too. And then you get pushed above the modified adjusted amount and pay a little bit higher, but we can walk you through that. So, the other thing is, Jennifer, they don't even tell us what the number is going to be at. If they look back 2 years, little interesting nugget, and then I'll go ahead and wrap up for here today. But, if I'm going to get above a threshold here in 2021. I don't find out if I'm above the threshold until 2023. In other words, the numbers we use right now for this year are going to be adjusted slightly for inflation. And we don't really know what the number where the cutoff's going to be until we get out there. So this is something that we typically are using this year's numbers, and we know that we can kind of go over just a little bit. But it's kind of you got to use a little Kentucky windage, I guess, is the way that they would use that. So anyways, with that said, I hope there was some value here today. I apologize that we didn't have our regular scheduled market huddle. Tim Sargent from Sterling Capital, he's going to be back on next week. We'll have Dylan and him go through some of these changes. Again, they've had a great year. It's a great partnership, and we can't wait to share some of that information and some of Tim's wisdom. But for now, Jim, we'll make sure we reach out to you. Kirby, I know you had something you were asking for. Feel free to call that number there, guys, 952-460-3260. I'm going to put it back out there. If you have any questions, and let's schedule some 15 minutes with one of our team members here, and we can make sure we get anything you need. So that includes Jim and Kirby if you don't see anything in the next few minutes. That said, guys, I hope everybody has a great week, and well, we'll be back next Monday. Have a good afternoon and a great rest of your week.